we'll talk about one big investor who has really benefited from betting on long-term trends in world's most renowned, loved, and admired investor, Warren Buffett. Everyone knows him. I mean, when you first learn the word investment, the second word you learn is that invest like Warren Buffett. He's kept it very simple. He shared his ideas very openly. What he buys, once the buying is done, as per the disclosure norm, everybody knows. So by keeping it so simple, why is that you only have one Warren Buffett and one Berkshire Hathaway? Parallels have been drawn that how great investors like Monish Pabrai, they've cloned him, but Buffett is someone who at least has given a very clear framework of how to invest, more importantly, how not to invest. What an extraordinary human being, and what an extraordinary philanthropist. All I can say is long live Warren Buffett, so that we can learn from Warren Buffett's wisdom. Vishal Khandelwal has been tracking Warren Buffett ever since he had hair on his head. So what, he's lost his hair. He's still tracking Buffett, right? Am I right?
That's true. That's true. Thanks, Nikunj.
Have I done the needful in just capturing Warren Buffett, the man he is, or you would like to add more?
I think there's so much to talk about Warren Buffett, and I think days was past and we would still not even touch the most important learnings that he's had to share over the years. The past, in fact, 60 years of running Berkshire Hathaway and writing shareholders letters and talking to shareholders. He's almost told the same things again and again, Nikunj, right? If you, the crux that you mentioned, right? He's been telling the same things for 60 years. He's been almost practicing all those things for 60 years. And the reason you said that there's no second Warren Buffett is for a simple fact that he's tried to keep things so simple in a world where we're all chasing complexity. So when we're chasing complexity and when someone tells you that it's so simple, right, in terms of the principles of investing, how you invest, how do you think about being an investor or an owner in a business and not really a renter of stocks, right? Most people think that it's so simple, it may not work for me. And that's the reason they end up choosing complexity, which doesn't work for most people. So I think that idea of keeping it simple, and that's the reason there's no second Warren Buffett ever. I think that is an idea which is a very powerful idea.
Every AGM of Warren Buffett has one hallmark. He will share something new, interesting, different, insightful, yet same. What has been the punchline in this AGM?
I think so many lessons to learn, as I said, right? He's been saying almost the same things, advising the same stuff. But there are a few thoughts which I took away, and I think they were among all the thoughts which he shared so openly, including Greg Abel, his successor. I think one of the most powerful thoughts that he talked about is the idea of association, right? And this is not just about being a good investor. Of course, it applies to investing as well. But his lesson on associating with the right kind of people and then moving in that direction because you are associating with the right kind of people has so much in common with living a good life, having good friends, and also investing in good companies, because you also want to associate with the right kind of managers that can really help you grow your wealth because you are a part owner in the business. And again, as I said, not a renter of stocks, right? So associating with the right kind of people so that you move in that direction is so important. Keeping things simple, as I mentioned, doing what you need to do, treating people fairly as like you would want to be treated if the roles are reversed, respecting your managers, respecting your shareholders. There's so many lessons for investors, managers, individuals, young people out there. So association bias is one. The second important thing I think that he's been talking about is with respect to treating others fairly. And that's such an important advice, not just for people, individuals, but also for money managers. Right? And he, I think, mentioned a couple of times that it's so easy to do stupid things with other people's money than your own money. And I think if that lesson is something that money managers take into account and remember and practice, that it's so easy to other people's money stupidly than your own money, I think the world and the financial system would be a much better place.
But the heartbreaking news for all of us is that Warren Buffett has stepped down from executive role. What does that mean? I mean, does that mean no Buffett in the next AGM?
I sense so. So I was at the AGM last time, and I could sense the of course you expect that these guys Munger and Buffett would last till like 150 years, and they are just not going to pass away. But you sense them when you see them, right? And this time when he announced that the AGM is only going to continue till 1:30 p.m. Omaha time, there was a sense that probably this is the last time he's appearing on stage. But you never know. He's Warren Buffett, like he said, I am Warren Buffett at the start of the meeting. So, and I would not be sad here. There's one very important thing that he mentioned in this AGM where he was talking about Charlie Munger. And he says that a lot of people ask you if there's one person in the world that you would want to have lunch or dinner with, who would it be? And Charlie Munger said that I have had lunches and dinners with almost everyone in the world because I've read all of their work. So by reading and learning from people who are dead, who are alive, you're actually having a personal conversation with them. Right. So same with Warren Buffett, 60 years of not just being an investor, but also being a wonderful teacher to the world about investing, about living a good life, about decision making. So even if he steps down as in his role as CEO, which he has to do probably at 94, 95 years of age, I'm not sure how long can we expect him to go in the current capacity. But I think his learnings are all there in front of us for many years. It's our responsibility now to even, if as investors and individual decision makers, to really take them forward. So I think I would not be heartbroken. This was what was expected. But I think the most important thing is the fact that we don't forget his learnings ever, even if he's not the CEO or the front face of Berkshire Hathaway.
Now let's talk about few new indications, and these are pure perfect market indications. You have to just pay a little bit of attention, and then you would say, okay, a new hint has come from Warren Buffett in terms of what his view on the world is, what his view on the market is. His cash pile is growing, but it is not the number, Vishal. His cash pile as percentage of the total asset under management is the highest ever. I mean, the number is a mathematical number. As companies will grow, that number will grow. But cash pile as total percentage has doubled or tripled actually. 100 has become 350 from 2022 to 350. Is that a view which Buffett or Berkshire Hathaway is saying that, okay, we are bearish?
I'm not really sure about the fact that he's overly bearish. I'm sure he's net. So I think there's very important concept in investing, which is called as expected returns. So expected returns is basically the probability of you being bearish multiplied by the amount of money that you're going to be if you're bearish. And you reduce that from the probability of you being optimistic multiplied by the amount of you earning when you're optimistic. So net, the number is still a positive, and that's the reason Warren Buffett is still investing. Even if they have reduced their cash piles, they're still invested in a lot of American businesses, and they have not really sold their core stakes. Even with Apple, I think they mentioned that the price had gone too far and they had to cut down the stake. But I think given the optimism with which he's invested, I would not really worry about cash pile as an indication of the world going down. In fact, if you were to read or listen to Charlie Munger's interviews from the past 2 years, he had been very negative in terms of the liquidity and the asset inflation that the world has seen thanks to central bankers pushing in so much money across the world since 2008. Now it's almost 17 years of consistent cash or liquidity infusion in the markets. The world has gone through a bubble. We are in a bubble. Nobody knows when it's going to burst. It is going to, but nobody knows. So Charlie Munger has been bearish. Warren Buffett has shown his a bit of a negative view on the asset prices by liquidating some of his holdings. I would not really take it as a net negative. It's still a net positive that he's still invested, and not just he. I think if you look at the Indian economy, the global economy, we are still in a much better position that we were maybe a few decades back. So net, I would not take it as a bearish position, though it is an indication that he's not finding value. And if Buffett is not finding value, that says something about how the asset prices have been, how the valuations have been, or how have they come to be over the past few years, both across the world and India. He's not an investor in India, but we understand, right, what has happened in the Indian markets in terms of valuation and everything, right? So 2020 was just a mild shocker, right? Since 2008, we have not had a major decline in valuations. Of course, Indian companies have been doing really well. Cash flows are good. Capex is happening. It slowed down a bit. Revenues are growing net over the past few years, almost more than a decade. So net, we're still doing well, and they're still expected to do well. I think it's only a matter of valuations and not about the macro view that the world is going down or America is going down or any country is going down.
A lot of praise on Japan. A lot of praise on those Japanese trading houses where he's invested in it. He's almost like given everybody a headline that go to Japan, not only as tourists but as investors. Buffett's never invested in India. And I mean, who are we to hold it against him? But that is something when I say, ouch, why not India? Fourth largest market in the world.
That's it. I think it's also a matter of the size of acquisitions that he makes, right? So Indian markets, I'm sure they have developed in terms of the depth and the liquidity, but we are probably not in that zone. And Buffett and Munger have been very strong or very critical of corporate misgovernance, whether it's American companies or any company. So in India, we've seen that it's a very slippery slope as far as corporate governance is concerned, even with some well-known names that we've seen across the years. So I think that's one reason. Of course, it's liquidity and the depth of the market, which probably is not so deep for Buffett kind of an investment, and also the corporate misgovernance issues that have happened and how they have not been so resolved in the past many years. So there's so many things. I think someone in the AGM asked about Mongolia. So an investor from Mongolia asked him why if Warren Buffett is going to probably invest and probably talk to people in Mongolia so that they can think about investing and do all those things. And he mentioned that he's not going to invest in countries or probably that's high risk where the currencies can go to zero. So he was talking about Mongolia. Of course, that's not the case with India. India is a very, in the sense, compared to the US, we still don't have a strong currency, but Indian central bank has been applauded across the world for the kind of policies that we've had. So not Mongolia for sure, but there's so many risks that Buffett has to take into account for the kind of investments that he makes. And the most important thing, as I mentioned, is corporate governance, which I think is a slippery slope in the country like India.
Tariff, Vishal, it does not help anybody. And Buffett
it doesn't help anyone. That's why he said it's not a war. We all benefit when others benefit. So of course, he's not in the policy making, so he cannot do anything. So there are things which are funny, which are happening around the world. And again, I think that's one concern which I have, that now central bankers and policymakers are trying to make the markets or probably keep the markets volatile. And he used the word casino in his probably multiple times in his talk. That's like a casino, right? So where in a casino, right, till the time they keep the game entertaining, people are going to play. So if central bankers and policymakers, the governments are going to keep the markets volatile through their ever-changing policies and announcements, the investors and the institutions are going to play, and which is what is happening. So keep the markets volatile, engage them, entertain them, and they're going to come back again and again. This is a big red flag for investors, especially individual investors who are investing their hard-earned money, to understand that stock markets are not a casino. It's a game where you win by not doing anything, only when you made the right decision. Right. So it's so important, the idea of survival. Nobody talks about survival here. We're all talking about 16 months, 18 months, or 24 months of growth and earnings and PAT and all those kind of stuff. Nobody talks about a 20-year survival, because if you survive 20 years, you're going to do really well for yourself. And again, another quote from Buffett, which he mentioned in this AGM, and he's mentioned several times, is that you only need to get rich once, right? After that, you just need to stay rich. And if you want to stay rich, you have to survive. And if to survive, you have to practice those simple fundamental rules of investing that Buffett has talked about, that he's practiced. And they're all in front of us. If you can just do that without aiming for a supernormal return, or without aiming for being a renter of stocks, instead of thinking of yourself as an owner of stocks and owner of businesses, you will do really well for yourself over the next 20, 30 years, or whenever your financial goals are coming. It is simple. It's not easy. It's simple.
Vishal, one missing part from his entire AGM this time was that, again, no mention on Bitcoin. I mean, he's gone on record, Charlie's gone on record and said Bitcoin is like rat poison. Buffett has always defended why Berkshire Hathaway has never bought into crypto, and they're not a big votary of crypto. Until unless I missed it, there is no mention of crypto also this time.
Nobody asked him a question. So that's the reason.
We all know the answer, maybe that's why.
Nobody asked this question. People asked on AI this time, because AI is hotter than crypto at this point of time. So people asked about AI, and he says there are wonderful things which are happening in AI, but we don't understand them as of now. Right? Typical to Buffett. And nobody asked him probably also about gold, his view on gold, whether it's changed or not. So I think he's held his view on crypto, cryptocurrencies. like Charlie Munger. It's his way of investing and looking at the world. Probably is something that he doesn't understand. I think one very
Are
important
you
thing that
sharing
we
with
need
our
to
viewers?
understand.
Are you
Yes.
sharing with our viewers what his view on gold is, or should I share it?
You can. I'm sure a lot of people know Buffett's view on gold. He's only positive on assets that generate cash flows, and gold is not one of them. It's a hedge against bad times for sure, but he's never been favoring gold ever in his life. I think that's a view that Buffett has.
When he came to India, he said the following. At that time, gold prices were not even $2,000, right? He said that you take all the gold in the world, and it becomes like a large cube. And the value of the large cube would be $7 trillion. This is 2011 or 10. I'm just forgetting the years here. But gold was definitely not 2000. You add another 30% to that value of that cube. That's $10 trillion. In $10 trillion, you can stare at the cube and say, okay, I'm rich. Or you can buy companies of the size of Chevron, companies of the size of Apple, companies of the size of other large companies. You will still have some cash and you can buy on the farmland. He said, where is productivity in gold? You buy a farm, you can grow corn on it and you can make money. You can harvest it. But gold is not productive. And Vishal, we are speaking to an Indian audience here who said, okay, gold has beaten S&P in last 10 years. So if you invested in gold, you managed to beat stock market returns.
We can change. See, we can change data to fix our narratives, right? So we first form a narrative. Of course, gold has done well in recent times, and even over a longer period of time, I'm sure there are statistics where across multiple time horizons, gold has beaten the markets and equities, right? But again, I think one important lesson that we need to take from both Munger and Buffett is that it's very important to play the games that we think that we can win at. Gold probably was never his game, and his game was to invest in corporate America, understand businesses. What he understood. And that understanding, earning a 20% compounded annual return for 60 years helped him build or grow his company's wealth like 5.5 million percentage, 5.5 million percentage without having gold, right? So who needs? The point is, it's very important. Again, a lesson for us. If you understand gold, maybe have a part of it. In India, we hold gold for emotional reasons. Very, very important point that probably Buffett is not going to understand, because in India, the reasons for buying a lot of gold is somewhat different, right? But again, I agree with the fact that it could be just a part of your portfolio, not your core portfolio. If you want to really bet on India to grow as an economy, then you are not saying that India is not going to go through crisis. Of course, net, we are still going to go ahead. But gold is going to help you in terms of crisis. But net, if you are optimistic on the economy, I think for a long-term investor who's young, especially young, a large part of the portfolio should also still be in productive assets like companies and equities, whether directly or through indirectly. So it's entirely a matter of how much return you want and whether you can time it. And if you're looking at the past returns and just trying to fix your narratives just because in the past 1 year gold has done well. So a lot of people now say, okay, let me have gold. Should I buy gold? You just have one bad year or one bad month of gold and people are going to talk about, okay, now small caps, now mid caps, now micro caps. So it's an entertainment business, Nikunj, we understand, and you look at it from very close quarters. It's purely an entertainment business. The more we separate ourselves from it, the more we think of it as wealth creation and wealth preservation through equities, through gold, through bonds, through a good proper asset allocation. Right? I think that is how you win the game of investing over a longer period of time. In the short term, anyone can win. It's a matter of luck. In the long run, only people with the right kind of process and asset allocation are going to win. And you're not winning against someone else. That's the most important thing. That's another form of entertainment here, right? We are not trying to win at the game of investing against someone else. It's our game to play on our own. We are playing just for the sake of ourselves, just for the sake of surviving and reaching that finish line, which is a financial goal. The moment you start thinking that I need to beat someone in it because someone had gold and someone had equity and I did not earn that kind of return, you are starting to lose the game. If you just play it because you need to be in the game and survive through a good asset allocation, I think you're going to do really well for yourself, and that is all you need.
So Vishal, what else is keeping you busy? The new book has come.
The new book has come. I'm working on a book on Charlie Munger now. Right, so a lot of stuff to write, a lot of stuff to read and think, right? So I think that's what keeps me busy.
Yes. And how's the tribe growing? I mean, last count, when we counted, it was nearing 100,000.
Yeah, it's 100,000, right? So this is one new insight which I've had for the past 2 to 3 years, especially after COVID. So if I were to look at the numbers, and I think that is a reflection of the markets or the economy or the generation that we are. more and more people, or probably if you look at the attention span of people, we had an attention span of less than that of a goldfish, which is 8 seconds. We cannot really hold an attention for 8 seconds. And now in a world of social media and video and Instagrams, I've seen that number of people who want to read stuff has stagnated for me, and this is a plain fact which I cannot deny. So I'm still at almost like 100,000. The tribe has grown very, very gradually compared to what it was before COVID, right? But I'm happy because what I understand is people who are still reading my work, because everything is available online now, you can ask a chat GPT to and answer your question. Despite the fact that if I'm holding on for like 100,000 readers, I think it's a good sign. Plus, yeah, I think it's a state of the market and the state of attention spans that we are in. Not worried at all.
I will raise both my hands to say that I am one of your readers. I enjoy the kind of good work you do, and a subscriber as well. Not a reader, but a subscriber, which is more important.
Thanks.
So keep up the good work.
If I were to use Buffett's parlance, you're a good friend as well. I think that surpasses everything else. So thank you so much, Nikunj.
Thank you so much. Appreciate your time. Keep up the good work, and do pass on my regards to your family.
I'll do that. Thanks, Nikunj. Take care.
If you like this video, then like, share and subscribe to ET Now.